Thank you, Marty. And thank you, Will, Abby, Markus, and Pat. What I'd like to do is I've instant messaged you guys with one or two questions to ask. And as I'm waiting for Abby and Pat perhaps to come in, I'd like to kind of tee up our conversation, just provide kind of a big idea, kind of talking point that I think will incorporate each of yours discussions and key points that you want to make. Just a quick background. I'm a fractional CMO at a industrial automation AR company. We focus on building connected workspaces for industrial workers. So it's kind of bringing AI and the flip side of that, intelligent assistance, to frontline industrial workers, primarily in lag industries like food production, metals and mining, oil and gas, essentially lag adopter industries. So I'm kind of seeing the hind's end, if you will, of adoption of AI. One point that I wanted to make that Marty made is AI is so pervasive that we don't even see it anymore. Whether you're scrolling through videos on Facebook or you're looking through things at Quora or shopping on Amazon or Walmart, AI is already deeply woven into the fabric of those businesses. So I'm going to put on my whiteboard here two or three kind of high-level concepts, and then perhaps ask you to kind of speak to those. First of all, what I'd like to talk about is essentially a very simple concept of a data flywheel, where I've got some sort of an action that produces some sort of data, that produces some sort of an insight, that comes back and improves. So it's a matter of how quickly we have turns of action, which is going to be some sort of a user experience or some sort of a system event that produces data that then mine for insights that then allows us to make more informed action. So basic data flywheel. I want to put this in the context of digital transformation. Now, some industries like telecommunication and publishing, they're already digitally transformed. There are others, like I said, that are still kind of in the process of going through that. And I want to suggest that the market for digital transformation is about a $1 trillion market. So there's $1 trillion that's being invested and spent with vendors in digitally transforming their organizations. And while that's pretty exciting, there is at the end of this, there's another one, which is a $20 trillion, and I call it Process 5.0. And that is, once you're digitally transformed, what do you do? And in this one, I'm characterizing this as the age, and this will be a 10-year, 8 to 10-year run of continuous optimization of core business operations. So data flywheel, continuous optimization. So for the companies that are already digitally transformed, Netflix, Tesla, I love Haier, the Chinese appliance manufacturer, Pratt & Whitney, it's all about now how quickly can we convert user actions into data that allows us to optimize this. So in the case of Pratt & Whitney, they no longer sell engines, they sell power by the hour. Cool. So with that, let me start off with Mark. Let me start off with Will. Will, what are some recent investments that you're excited about in this space?
So maybe also just
Hey, Michael, before we get started, can everybody introduce themselves? I just want to get their people's bios up.
Yeah. Great. So happy to lead with that. So my name is Will Weisman. I am the founder and managing director of Kittyhawk Ventures. Kittyhawk was spun out of Singularity University, where I served as executive director for 7 years. We spun out in 2020. We are a seed stage frontier technology venture firm, very much generalist. We've invested in everything from quantum computing software to machine vision robotics to med tech and cyber and space and even psychedelics. We love to invest kind of seed stage level. We're raising our third fund right now, just brought on the US, the largest sovereign wealth fund in the US. I'm very glad to be with you all today.
Cool.
You want to go around the horn on the intros?
Yeah, let's do that. Let's do around the horn on that.
Great.
To the extent that you guys are making investments, or at least life bets in a startup. Markus, you want to speak to that?
Yeah, sure. So let me just give a quick intro here. So my name is Markus Lampinen. I am one of the co-founders and the CEO of Prifina. Prifina is a venture-backed data technology company here in San Francisco. And then in addition to that, I've founded a couple of companies in the past, and I have the privilege of having invested in a number of companies in AI and ML and developer tools. I'm a big proponent for software enabling developers to open up new markets. And that's what we believe will happen in the data market as well, that it will become more open.
Cool. Avi?
Sure. Can you guys hear me? Okay, perfect. Yeah, so my name is Avi Subramanian. I'm New York City based. I run GGA Private Capital, which is my own private investment firm. I also have a dual mandate where I run a Hong Kong family office called Black Pine. So in both cases, we're pretty actively investing in what is called obviously frontier tech, spanning software, cybersecurity, fintech, quite very active in the crypto space, gaming, metaverse, etc. So AI has obviously common thematic link across many of these spaces, and it's obviously it's like running water English. It's sort of not, it's sort of so embedded in it that it doesn't need to be separately sequestered. So very active in it and in the space, and again, happy to engage in the discussion with the group.
Cool. Nick, would you like to take on that question? Do you need to restate the question?
So yeah, if you don't mind restating the question, would be helpful.
Sure. Let's see. How do I? With respect to investments in this space of deep tech, whether it's data, AI, machine learning, what are some of those that get you excited? Recent investment or investments about which you're excited in this space.
Sure. So then, thanks very much for the question, Marty. Thanks for a great conference. It's great to be here. By way of quick background, I wear two hats. One is making the investments for our family, the CIO for our family, and the other side is a GP of a venture cap early stage and VC fund out of LA. And as part of the VC investments, what we believe is in the deep tech, as it relates more to space, we believe that the space is probably the next very large frontier, and trying to combine the space with the deep tech, so more specifically the space tech. That's the area that gets us very, very excited. We've made some investments. We're actually in the process of looking at some more, but that seems to be very attractive to us and high area of focus.
Cool. Pat, what's got you excited in terms of investments in this space? Going once, going twice. Pat?
And Michael, I'm happy to jump in while we're waiting for him and answer the question. So, I think this is an extraordinary time to be a deep tech investor. I think at one point it was about software eating the world. I really think that deep tech is really playing that pivotal role now, and really is in a place to go out and solve some of the world's biggest problems. And my belief is, solving those big, hard technical problems that affect the world really creates enormous business opportunities. And so a couple things that I've invested in recently that I'm really excited about. On the material science side, we led an investment in a company called Skye, SCEYE. They're building a high altitude platform, so these airships that will reside up in the stratosphere, geostationary, designed to be able to stay up there for a year, have unbelievable kind of Earth observation and telecommunication uses. So geostationary from a satellite is 1,000 times further up. So you can think in terms of the physics and the granularity of what you can observe with sensors when you're that much closer. And just an incredible entrepreneurial story where you've got a founder, almost like an Elon Musk kind of guy, who has put $77 million of his own money into this company. And we came in as the first institutional capital there. And he's a material sciences guy who is basically taken his background to go out and figure out how to create the right materials and technological breakthroughs in order to solve a very, very hard technical problem that the U.S. government has invested, over $10 billion in trying to get objects up into the stratosphere. So that's one we've led recently that we're really excited about.
Cool. So Markus, a question for you. I know that you're kind of more singularly focused in data management, and so on. In that particular space, what do you anticipate to be the next big wave of innovation and wealth creation to kind of go through your space?
Yep, no, that's a super interesting question. Happy to take that one. Actually, just kind of reflecting back on how Marty kicked us off in terms of talking about like this distribution that we have and how we have all of this AI, and then also kind of you, Michael, as you were drawing that flywheel, then you're absolutely right that I am on the data side. And my view in terms of this is that your AI is never going to be better than your data, that you have to essentially have the data in there, otherwise you're skewed. And I like one of these concepts, which is around data flow, that as long as the data is flowing between systems, as long as it's going in the ecosystem, then we can generate more value. If it's stuck in a silo, then that means that we're practically stuck. One of the areas that I decided to focus on myself as an operator was in this area of personal data. Because if you start thinking about how much data each of us have, we have our smart devices, all the apps that we use, we have our Google location data going back, God knows how long, smart rings, IoT devices, and so on and so forth. But we're not able to really use that, are we? Like it's stuck in these silos, and yes, we can get access to all of the raw data and so on and so forth, but we don't have any piping. And then we as individuals, and we don't want data, we want those actions, we want those recommendations and those suggestions from that. So one of the things that I see is that this personal data that we've got, it's only really kind of got unlocked in the last couple of years. Now we are the legal authorities of that data. It is our data. We can get it. We can actually utilize it. But if you compare it to the enterprise space, if you compare it to how enterprises have organized their data and data lakes and data storages and data layers and all of this type of plumbing, we as individuals, we have nothing. And it's not just individuals. It's just that we as individuals, because we can't unlock the data, then we're not in a flow state. That's one of those things that I kind of look at as a huge macro opportunity, because my perspective and my hypothesis is that we're kind of at the end of how good our AI systems will get unless we actually unlock this data for end users. Now, when I say end users, I'm not talking about just individual consumers. I'm talking about enterprise users as well, because take, for example, big pharma. What if you could take all the wearable data that individuals have, and you could actually run compute and different types of AI in a protected way, but also in a way that actually crunches 1,000 times more data than what you have access to today. So that's kind of where we're going, that we believe that in order to actually unlock this data, you need to organize it differently. You need to organize it in a way that the processing can be at the edge on what we call the user side, so that you can end up with data that's actually not really leaving the user, but processed locally. But then kind of connecting back to what Marty was talking about like personal AI. So in our way, kind of in my thinking, and I've, as an entrepreneur, I decided that this is what I'll spend the next 10 years of my life on. But I think that this is actually one of those really, really cool things that if you yourself can actually unlock this data about you, and if you can get smart algorithms and smart, let's say, household AIs to sit on top of that, that means that you can get all of these similar type of things that enterprises have, but then just have them run for you and really kind of build this agency. I think that's almost like a prerequisite that we'll have in terms of the next 10 years, that in order to get this hyper personalization and this user agency and really kind of build it up from, I don't know, an individual point of view, then we need to get that data out. And that's something that 2 years ago when I started Prifina, then we looked at it as a 10-year type of venture. But I have to tell you, it's happened quite a lot quicker. Like we've got over 20,000 data scientists and developers building on top of this data. And they're taking things like, for example, this smart ring that I've got here, and they're building hundreds of apps on top of this, because the company that builds this ring, they're only going to build one app because that's their business. But developers, if they can open up that silo, they can build, 100 times more value for different types of user pools. So that's a long way of saying that I think that's a flow state where you don't have that flywheel turning. But if we can get that flywheel, I think that that's a really exciting opportunity.
Cool. Before we go on to the next person, do any of our panelists have questions of Markus? Yeah, go for it, Avi.
I don't have a question.
Oh, okay, great. So how about we shift to you then, Avi?
Sure.
What's got you excited in terms of investments in this space?
Yeah, so I think the family office I represent in Asia has several fintech platforms. One is called Lufax, the other one is called Oriente, that sort of uses AI deeply with respect to these are the sort of digital native platforms for non-bank lending and the like. So we use AI in a very very holistic manner for obviously credit scoring and offering the various products to the user base. And obviously it's with respect to the demographics of Southeast Asia and China, it's a growing ecosystem. So AI is, we wouldn't do it effectively without that as a core feature. So that's exciting. Similarly, I'm been broadly active in many, as mentioned, kind of very disparate verticals. So in terms of AI, I have personal investment in a few companies in India that are in the social commerce space, short-form video space. So AI is instrumental in terms of ascertaining user behavior and serving up sort of customized and personalized game experiences based on what they click and what they consume, et cetera. So that's just the other end of the spectrum. So one is on the fintech side, one is on the gaming and that sort of side. So I think that it's again, as I said before, AI is almost it's a really not even it's a horizontal, right? So it's endemic to, and it's sort of critically important to all these sectors, from with respect to scoring and with respect to credit and everything for that matter. So it's sort of a long answer, but so it's instrumental in all the companies we're involved in.
Cool. Nick, what's got you excited about investments in the space?
In looking at the space, there's a company that we invested in. It's still in the stealth mode, so I can't disclose the name for the purpose of this conversation. But in terms of going to space, one of the solutions is trying to solve for the explosions, because a lot of rockets have actually exploded in the past, either at the point of takeoff or in some cases at the point of landing or around landing or so. So the company that one of the companies that got us very excited to invest in this space is they're figuring out a horizontal way for these spacecrafts to take off and land. And as a result of that, the accident rate drops substantially on one side, using DeepTech, using deep research and quite a bit of resources they've had at their disposal, and based on their previous experiences or so, they've also solved for the problem of reusing these spacecrafts in multiple trips or so. So in addition to being a lot safer than the spacecrafts that are currently in the market or being developed or being pursued, also the ability to use them in the future reduces the cost of these trips. So it allows for future traffic into the space to be done in a much safer way, much faster way, and for the spacecraft to be repeated, to be reused, as a result of reducing the cost. Because one of the major issues with them deep tech and spaces, the cost is still prohibitive, but just like the cost of the across Atlantic flights back in the 1930s, it used to be over $100,000 in today's dollars. And we know today flying over the Atlantic is a fraction of what it was in the 1930s. The same thing we expect in the space using deep tech. We'll see the cost come down substantially, and we'll see the safety increase over time leveraging deep tech. And the company that we invested in pretty much solves both those two problems.
Cool. Pat, do you have anything to say? You'll have to turn your mic on if you do. I'll give you about 10 seconds, and then we'll kind of move on to the next question. 1, 2, 3. Okay. There we go. So I'm going to introduce another visual construct for you guys to kind of speak to. So in a classic diffusion curve, diffusion of innovation or crossing the chasm, whatever you want to metaphor. We all stole from the same guy. I want to introduce the concept of artifacts of the future. So an artifact of the future is something that already happened. It just has not yet gone into mainstream adoption. Okay, so an artifact of the future is essentially a breakthrough here with experimenters or the first wave of early adopters, and that there might be anywhere from 12 to 36 months before it becomes a, oh my God, that changes everything. So let's do a round. I'm going to ask you, so you can call these black swan predictions or game changers or breakthroughs. Choose your metaphor. So I'd like you to speak to one breakthrough that will accelerate deep tech, and then one hindering factor that will likely slow adoption or diffusion of deep tech.
Hey, Michael, it's a little bit hard to see that whiteboard.
Yeah, I understand.
Michael, I'm happy to jump in. I think there's some really fascinating developments taking place around brain-computer interface work. So the ability basically for you to interact with a computer directly from your brain, and lots of very talented entrepreneurs working on various solutions to it. Everyone from Mary Lou Jepsen at Open Water to Brian Johnson at Kernel to Elon and Intercosmos, a lot of really, really exciting companies. And this notion of being able to control computers, to be able to guide artificial limbs, has the potential to really open up kind of how we interface with the world in a really dramatic way. So I think that's something that's going to have some very, very widespread application. We're starting to see it, already happening and working, and I think there's going to be a very rapid acceleration in terms of all the different use cases, and like with so many of these things, there's so many use cases that will be created from this technology that we can't even imagine right now.
So you're positing that there's going to be a fundamental shift in a human-computer interface, and that it's going to be a neurological base or some telematic biological interface.
Yeah, exactly. Lots of different use cases, from controlling to for it being able to interact and understand kind of what you're thinking and what your needs are, and rooms adjusting to you, temperatures adjusting. I think things that might, to answer the second part of your question there, the big hindrance with this type of stuff, these are medical devices. And so it's around regulatory risk and how quickly the government reacts to these emerging technologies and understands these emerging technologies and lets entrepreneurs kind of build businesses around them. So that would be kind of the biggest near-term hurdle that I would imagine. I might have said a few years ago the capital might have been a real hindrance, but there's just an extraordinary amount of capital these days going into these type of developments.
As a follow-up on that, Will, what will accelerate adoption of this new human-computer interface, which we can just call implicit computing?
Yeah, I mean, there's a very clear path to the acceleration of technology, driving down the price of technology, and then essentially democratizing technology. So I think the faster we scale up production with these type of technologies, the lower the price becomes, the broader the application. And again, regulation can help with that. Capital can help accelerate that and get you further up the manufacturing curve.
Cool. Markus, your ball. What's one artifact of the future? What's something that's already happened, perhaps in experimental labs, data science labs at university, wherever new IP is created, that has not yet entered into the mainstream, that has the potential of being a game change in your space of personal data?
Yep. Certainly not a narrow question. I'll give you that. I kind of started
thinking
throw
softball any softer than that.
yeah. And just for the record, I love the whiteboard. That's fantastic. So kind of from my point of view, my brain immediately went to enabling software developers access to something that they haven't had access to before. So I'm an open source geek. I've invested in a bunch of projects around open source, and it's also part of our roadmap at Prifina that in order to make data layers credible, then they have to be transparent. And to us, that means open source. I will say essentially just access to really powerful ML libraries and just machine learning overall. That's one of those things that it already exists. Like you have fantastic companies, ex-Bell Labs PhDs that have built transparent platforms, not just the the Googles of the world, but even smaller companies. Like there's a company called EasyML, which I'm involved in, that has a transparent ML platform that anybody can use. But I think one of the things, the availability of this type of technology just at your fingertips for anybody, I think it has a couple constraints. One is the fact that software developers still, we don't have too many of them. Like we still have a very, very small pool of developers that actually utilize these things. And oftentimes these developers are, you can say sought after or distracted, whichever you like, that they're employed into various different types of projects, and you rarely have this click. But I think this is one of those things that we have a lot of technology, a lot of really, really amazing, powerful technology out there, but it's not really making its way oftentimes into those areas, into those builds where it could be utilized right away. Part of it's a commercial problem, part of it's just a marketplace problem in terms of matching needs and demands. But just as a horizontal answer to your question, then I see that we have a lot of these enabling technologies for software developers that democratize access to whether or not it's AI or personal data, because in a way, personal data is, foundation to building AI on that. But that's one of those things that I've wondered, because let's take the last 5 years, we've had great ML platforms, for example, but their adoption hasn't really, done a topsy-turvy on the world yet. It's still very incremental, and it's very enterprise-driven oftentimes.
And just for to expand that, so these are machine learning platforms, and there's a process by which I take a bunch of dirty data, clean it up, put it into some sort of a inspection process, develop and test some algorithms against it, and then such that I'm now producing useful insights. Is that a kind of fair, non-technical summary of what you're talking about?
No is the short answer. The long answer is a lot longer. But I would say that there's many ways of running ML. Like you can either go through the structured supervisory learning of going through training data and then running it against some real data, or then you can kind of just do a data dump and have some unsupervised learning that picks up on patterns. Both have tremendous use cases and tremendous differences in terms of where they are used. But I would essentially make the argument that they're all underutilized, that a lot of the problems that we're kind of getting to, they're very crude. They're not yet at the stage that we have essentially, we don't have the developers armed properly.
So you're speaking to a hindering factor to a broader democratization. And so could you put your, kind of poke that a little bit and what is the hindering factor?
Hey, Markus, can I jump in 1 second before you, because I know you for a couple of years now, and I know where you're coming from, and the issue is that today, AI is being used for trivial purposes to sell more stuff on Amazon and to view what you're doing in your house and to sell you more soda and things like that. Okay, but it's not being used for very useful, human purposes of filtering, getting to know your family better, learning faster, etc. So,
Yeah.
Go right back in.
Yeah, and I think one of the hypotheses that you could make is that, right now it's very much driven by enterprises' demands. Like, what are the enterprise bottom lines? What are their priorities? And they're the ones that can pay the most for utilizing these libraries and so on and so forth. So we don't really have, we don't really get to all of the use cases. We don't get to those 10 years from now use cases, except for, some of the hopeful and very visionary entrepreneurs, for example, here in the Bay Area, and then certainly all around the world. But I think it's just kind of it. I think one of the solutions to that would be that if we're able to actually distribute AI, that we can actually open it up to the marketplace and individuals themselves can have access to certain type of applications. But it is just, it is one of those things that it's completely clear that in 10 years, for example, everybody will be using, a lot more of these libraries. They will be commonplace everywhere, and they certainly already are. But how often do you see a developer that, starts out thinking that, hey, I'm going to build this app, let me go grab that open source federated learning library and come back? That's not yet it's not yet built in. But I do think it's just an education problem that as we essentially have more of that marketplace search, then it will click a lot more in the marketplace.
Would it be fair to summarize, before I move on to the next person, would it be fair to summarize that it's a business ecosystem problem to solve, and that one of the root causes for slow adoption of some of these non-trivial AI applications is that you have hundreds or thousands of small developers making money doing what they do in the ecosystem?
I think it is ultimately a lack of a free market, lack of an open market, that we don't, like most of the buyers of that type of technology, they represent, a few companies. And then most of those use cases, then they're not really coming from, let's say, a pure efficient market. So
I got to jump in here again, because it's not about it being non-trivial. How easy is it? I heard about this Spanish soap opera, right? And I went and I watched it. It's supposed to be the best Spanish soap opera of all time. It's called La Reina del Sur. I highly recommend it. But I watch almost all my TV in English. But as soon as I started watching it, I started getting Spanish language commercials on my TV, like just 50%, right? Because the artificial intelligence had determined that I was Spanish speaking, right? What does it take to take the list of every Spotify and Pandora song I already have and make sure I get a feed of only good songs going forward rather than something which is wretched, right? So I don't think it's as non-trivial as you think. I have a database of thousands of Spotify tunes, right? Why can't I just use it and go to the next service and just port it from port to port? And this gets back to what Markus is talking about, is who owns the data. So Markus?
Yeah, you're absolutely right. And I think part of your problem is that you have broken data sets and different types of data silos. And then, that Netflix or whatever streaming service you're using, it's going to give you the best recommendations based on what it knows, but it only knows so much because you live your life also outside of that silo. So I think part of it's also that, we have so much of that data in so many different silos and different formats, and it's just not flowing. So in that point of view, it comes back to this open ecosystem that we need to guarantee that data flow. Otherwise, our AI in the future is just going to suck.
Okay. So Nick, in your perspective, and I guess this is going to be in space exploration and things like that, what's something that's already happened that has not yet moved into any kind of broad recognition or mainstream adoption?
Traveling to space, obviously the developments in the last couple of months or so is happening, but it has not moved into mainstream adoption. There's really a number of reasons for it as of right now. First, the skeptics on one side. The other one side is the cost of doing so. Although there's information out there. The number of people that are actually lined up, and some of these ticket prices are ranging north of $100 million for a trip into space. So that in itself is cost prohibitive. So the question is, how many people are there? How big is that market that can afford to pay those prices? So from a space advantage, the cost is the hindrance for now, and there's still a lot of unknowns, plus the speed of travel. Okay, we'll probably get to the moon safely, but then exploring other planets, exploring where the resources are, it will probably take a lot longer to get to those planets, and returning those resources to Earth or starting manufacturing up there. It's still early stages. The cost is one of the issues that is hindering the massive adoption and the success. I mean, we saw a couple of trips that took place in the last couple of months or so, and media coverage did help the whole thesis move forward. But we need to see more tangible success. We need to see more results being delivered, and then I think that the hindrance will remove itself.
So for example, one artifact that I ran across when I was mentoring over at the UC Lawrence Livermore Labs at UC Davis was high frontier manufacturing. And specifically putting something up 100, 150 miles, cracking moisture and generating hydrogen using solar energy as a source, by which to create a relatively low-cost source of fuel 150 miles up. So clearly that's still Buck Rogers science fiction, but in the next 3-4 years, that will, if we have a stable source of energy 150 miles up, that changes everything in terms of going to the moon and back.
Yep.
So that's what I'm looking for, is an artifact like that, something that has already happened, conceptually prototype, but has not yet entered into the main arena. Do you have any shots on that?
One thing I'll bring up is the fiber optic cables. For all of us old enough to remember America Online and internet not being reliable in the old days, copper wires not working well, then fiber optic wires came along, and that increased the speed and reliability of the internet. Now fast forward, based on the research we have seen in manufacturing fiber optic cables up in space, it reduces the impurities in those cables. So the speed of signal transferred through fiber optic cables manufactured in a vacuum where there's no gravity and there's no impurities, suppose it can increase the speed by 5 to 10 times faster than what we see in fiber optic cables today. So there's another example, especially for folks who remember the old AOL.
Perfect. So you're already taking care of the hindering factor, which is cost and things like that. So before I move on, Avi, do you want to speak to this?
Yeah, I mean, I'm going to switch gears a little bit.
Yeah, please.
A couple of years ago, I was part of a project where we spun out essentially a government sort of satellite communication IP sort of into a private holding company, and the premise was skip a few generations in terms of how fast you can get satellite communication space in terms of what the sort of the government and classified sort of sources use, as opposed to commercial, sort of satellite providers. And so essentially a sort of a high bandwidth picture that took, call it, many hours to transmit from even from low Earth orbit would take a matter of seconds. So essentially that would completely open up, a sort of large backhaul data transfer, call it between B2B, from a B2B perspective, and so on and so forth. So we basically used from a commercial application standpoint, we were going to basically be a redundant solution for if these undersea fiber cables that carry the Google and Facebook, the data gets cut, we would be the backstop solution. And similarly, we were going to do something for high frequency trading as being a data source for HFT providers who are like offshore and things like that. They could use our satellites for, even with the hops, it would be much faster than traditional sources. So that was an example where.
So if I summarize that, Avi, you're basically saying where much of the basic internet traffic is on fiber optics going, deep in the M-bone or deep at the foundation of the internet. You're saying that a lot of that data traffic is going to move into a interconnected network of satellites.
Correct.
Perfect.
Correct.
And
So,
that would,
yeah,
Go
so I
ahead.
mean, the project never saw the light of day because the company was sort of sold to a strategic seller. So they're going to use it for other purposes. But again, sort of fast forward 5-6 years later, we're seeing that sort of being realized today with all the different, Satco companies and, CubeSats and the like, right? So data is becoming commonplace, throughput, sort of everything's increasing, ubiquity of data, et cetera. So that's an example where that's sort of, the
okay.
government and sort of, a few clicks ahead, and then, you see that translating to the consumer side in a few years.
Fabulous. So I'd like to share one, I think, thing that's already happened here, early adopter, that would speak to most of the, specifically your Markus category in terms of a developer ecosystem. And we're calling it engagement LLCs. And essentially, inherent to AI, machine learning, deep learning, usually it's a product of breakthroughs are a function of a small team, 3, 4, 5, maybe 9 or 10 people, but a small team. Increasingly, what we're seeing is these small teams basically say, look, we are available as a high-performing team. And as a high-performing team, we are 10x to 50x more productive than a newly formed team. So you can put together a data science team for your company, and over 2 years, it will take you to come up to speed where you're basically competent. We can come in right now and be 5 times or 10 times more productive than that 2-year investment in a team, assuming that you could hold on to everybody. However, as an engagement LLC, we will deliver this product, a fully documented, zero technical debt product to you, turnkey, operationalized, the whole thing, in 18 months or 2 years. However, everything that we produce internally to deliver this product remains IP of our LLC. So all the data exhaust, all the testing routines, and so on that are not intrinsic to the product remain IP of the engagement LLC. 2, we will deliver this product. We will deliver this turnkey product at a half to 25% of what it is that you would normally pay an outsourced product development firm, like a Cognizant or Global Logic or whoever you're doing. In exchange for that, what we will do is we will deliver this product at half, a quarter, a fifth of the time, at a half to a quarter of the cost. However, at the end of this, we will then make our engagement LLC available for you to buy with all of the IP in it, but at a fair market price as determined once we've delivered the product. So then it's simply a matter of a straightforward merger acquisition of a strategic asset for which there are a lot of financial models by which to justify that. My point being is that this is how Intuit did their QuickBooks Online, and we're seeing this again happening more and more, where teams are coming together as an economic unit and pledging themselves to deliver a fully functional product. But getting compensated based on the financial performance of the product they deliver, thereby increasing their gain share by 10x to 20x if they just did it work for hire. So, quick round on that. Yay or nay, yeah, but how about on engagement LLCs as being one of the transformational breakthroughs in terms of creating IP and its monetization. You want to start off, Will?
Sure. So, so many ways to slice this. We've read so much about the gig economy, and I see in a lot of our companies, a lot of outsourcing that takes place. I have kind of mixed feelings about this, that particular structure. And I think it depends on the problem you're solving. And, but that type of financial incentive alignment, will absolutely happen, I think, for the very best teams, right? The very best groups of people will be able to come together to be able to demand rent like that and to get it. And so there are all sorts of benefits that can happen. And when you're building a company and you have a narrow time window sometimes to get something to market, being able to access the best team that can outperform anyone and to realize a market opportunity for you, that to be the gorilla to whom most of the rent accrues to, it can make a ton of sense to have a model where it's a little less upfront and you get a finished product and then pay more to ultimately own all the IP if that's important to you. So I think it's really interesting, and it is a very we're just seeing that the best people usually don't work for you, and being able to tap into these superstars to accelerate your own business building effort, I think is critically important.
And would you agree with my primary claim that your high-performing teams, the best, the top 3, 4, 5% of the industry, are 20 to 50 times more productive in terms than just kind of the mean average?
Yeah, I think I'm not sure exactly what the right number is, but they are, extraordinarily more productive, and that that's almost always worth paying up for.
Great. Markus, do you want to speak to that?
Yeah, so I was kind of thinking about tying it back to a couple of things that we were talking about earlier. One is that, Michael, when you mentioned effectively that we have the digitalization of certain type of industries ongoing. And from a technology point of view, I would certainly agree. From a culture point of view, I might be a little bit more skeptical. And what I immediately started thinking about is that, well, two thoughts. Part of this arrangement and organization, it implies that people are, willing to be entrepreneurs. And, I've been an entrepreneur my entire life, and I'm very conscious that most people don't want to be an entrepreneur for very good reasons. So that's one thing where most people prefer to be employed, and whether or not they would enter into an arrangement from that, I'm skeptical from just an, top level engineer point of view. Now, of course, top performing teams and so on and so forth, it's going to be very case specific. The second thing is that my last company was an API first financial back office for developers in Fintech. So anybody can build your own bank type of a thing. Went really well. I ran it into 2018 until the exit. One of the cool things but one of the things that you noticed in this digital transformation of banks was that they started acquiring teams. They started doing exactly what we are talking about, like buying the top performing teams, getting them in whichever ways, pay them boatloads of money and ownership and so on and so forth. What you saw was that those people didn't stay. Those people, they went in to the top 5 investment banks of the world, played around for a year and a half, and they said that, screw this, I'm out, like I'm not staying. And they went on to their next thing. So I think that part of this is not just monetary or IP. Part of this is also culture, that those top performing teams, it's very hard to own them. You might be able to own a project, but then ultimately you're going to need essentially those dedicated resources, because zero technical debt, every project starts off with zero technical debt, but it happens later on. So I think part of it's, I did one of my master's degrees in incentive systems and behavioral economics. And I think that's part of the tricky part, that actually kind of building a sustainable model, it's just hard.
Well, again, the central tenet of engagement in LLCs is, yes, you're never going to be able to hire the top teams and have them hang around. Your corporate antibodies will kill them. The Dilberts and the C-level players will just piss them off, and they will leave in droves. However, is there a way by which to get a functioning, revenue-producing, high-margin producing product from a team, fully operationalized, and make it worth their while?
I gotta shortcut this question, guys, and move it away from managerial science and back to deep tech and AI. So again,
well, I'm suggesting, Marty, that this is what's driving deep tech, and this is the primary constraint or hindering factor on broader adoption.
I think it's a capital friction issue. But guys, can I get a 1-minute reply from each one of you? Do you think this is restricting deep tech advancement, or do you think it's a capital? Nick?
I think it's more the capital. Very quickly, I grew up in Europe, and my apologies for bashing anyone with my next statement. But if you look in the innovation in the 1900s, when the 1800s happened in Europe, and last 70 years or 100 years happened in this country for a number of reasons. One is the capital that flows a lot freely in the U.S. compared to other parts of the world, and the culture, which was previously mentioned as well, but it's capital in my view.
Okay. Markus?
Yeah, I have to kind of build on that. I mean, I certainly agree, but I would essentially emphasize that risk-taking approach, because I also grew up in Europe, and you see that there's a lot more of this conservative approach to, you know, minimizing your risk and so on and so forth. And that's the one thing that I do certainly love here in the Bay Area, that there is this focus on, you know, what if this actually works, and then kind of focusing on that trail of thought and really backing it up also with sufficient capital. So I think it's a combination of the two, that capital alone is never enough. That will just get you into a bunch of trouble. But at the same time, then that type of ambition level, that's something that's absolutely a key driver.
Abby, are you there? Abby Subramanian? Okay, Will?
I think he dropped.
So, you know, I loved Markus's comments and would just amplify that. Really appreciated the comment about culture, and just, I think, you know, we were kind of talking about innovation, and it's very different when it's a smaller company, and thinking about how you build that, and culture, and bringing those people on to be part of your organization for the long term, I think is so critically important. Much different set of challenges around innovation at larger companies. But if you think about the Silicon Valley success story, it's been this ecosystem that's now kind of spreading around the world, this combination of institutions and generating all these smart folks. It's this mindset of thinking, you know, very big, bold ideas, and it's this proliferation of capital as well to help fuel this. So I think all those things go into the really exciting developments and acceleration we're seeing in deep tech innovation and company building.
Yeah, and I think what Michael says, I mean, it's extremely valid from a managerial point of view, but you know, I think that actually our next panel is going to address some of this aspects with the NFT discussion, and how people are, you know, kind of investing, you know, their own intellectual property into things, but they can claim ownership over a life cycle of the NFT. So, so I've got about 3 minutes left. So guys, can you just, you know, give us your, you know, 30,000-foot vision of, you know, where you think deep tech and, you know, where the space that you're in is going to be in the next year, things that we should be looking out for the next year, and things that we should be looking out for in a further time frame than that.
So, you know, I would say there's just more and more capital kind of pouring into deep tech, and it's becoming this really vibrant ecosystem. I think one of the most exciting areas that I'm thinking about, I mean, we've created a real crisis around the climate, and I think the resources that are going to pour into trying to solve those problems, carbon capture and sustainable energy, and creating a whole new ecosystem, are going to be an incredibly lucrative, maybe some of the most lucrative investment opportunities out there.
Right, we just did a panel on decarbonization. It's a big movement, and I think it's not going to be stopped. So, Will, that was Will. Nick?
I'll keep it very brief. I think when it comes to deep tech and space that we're in, we're probably at the top of the first inning. So it's enormous opportunities down the road. So just the beginning of the enormous story.
Yeah, I mean, I think there's a phrase, it's called like the Columbian Exchange, which is, you know, when Columbus discovered America and all this trade was initiated globally, right? And I think that what's happened with Musk and with space is something along those lines, if not bigger. So maybe it's the first, you know, batter in the first inning. Yeah, that's amazing. And Markus?
Yeah, the way I look at the world from my very own selfish biased point of view is that we're basically at the end of what we can do with centralized AI. So in a way, my point of view is that all the apps that we built, we need to rebuild. They're all built incorrectly. We need to distribute them, and we need to build them in a way that we build them around individuals and not corporate servers. So that's kind of the thing that I'm looking at. It might take a year, might take 5 years, certainly going to take more than a year. But that's one of those things that I'm increasingly confident that it actually has a probability to happen, because we need better AI. And then with the centralized system, I'm not really sure how we get there.
I would love to find out who are the people leading the personalized AI race, because I'd love to have them come on and speak all around the country with us, because to me, it's like the biggest necessity of finding out.
And I think kind of framing personal AI is also very, very interesting in that sense that it's not one AI, it's millions of AIs. Like the way that I think about it, it's like each of us having our own household staff of algorithms, and then having what we call micromanagers manage that household staff of algorithms. So it's like we need to go all the way to the deep end, that it's not one thing, it's millions of things for all of the use case that we do in our everyday life.
So I'll give you a great example. I have a robotic lawnmower, right? So I've got like some land, and I had to put wire around the land and set up the lawnmower, but you got to put a wire around it. And if the wire breaks, and I got to go and I got to buy a spigot and tie the wire together and use a burner to burn it so it doesn't break again. So I go on Amazon, I order, one pack of these things to bind wires, and Amazon says, do you want to make this a weekly order? Well, no, right? And then it suggests, well, do you want to buy other stuff related to this? How about a lawnmower? It just, right? So that is Amazon helping sell itself. It's not me solving my problem, right?